Hello and welcome to this weekly market analysis video. This is the first of hopefully a long series. So what I intend to do here is to go through a few charts that I go through for myself every week. It's going to be a mix of indices, cryptocurrencies, gold, and a few others. And I intend to share that with you every week, every weekend specifically. So why did I decide to do that? Because, well, first I do that for myself every week as well. I've been investing and trading in the markets for 5-6 years now. I build and manage passive portfolios for myself, and I also actively trade and speculate on the stock and crypto market. So this analysis that I run once a week, I operate on weekly time frames, and doing this analysis helps me to get a bias on what's going on, right? I do not use fundamentals. Of course, I read the news, but I'm not going to say that I'm an expert and I know like, oh, this news is going to have this impact. No. What I do is I simply look at what the charts are telling me. They are telling a story. They basically are an expression of buyers and sellers in the market. So using simple tools, trend lines, channels, consolidation patterns, and climax runs, I can get a sense of what's going on and how aggressive or how defensive I want to be with my own trading. That's going to impact how many opportunities I want to catch at the same time. That's going to impact what kind of opportunity I'm going to look for, and that's going to mainly impact, of course, my risk management. All right, so let's dive into it. I'll be sharing also, a few nuggets of knowledge that I learned, like what do I do, what I do, how do I do what I do, the kind of patterns I look for, some results that can be expected from these, and that's about it. So enjoy and let's dive into it. All right, so the first thing that I'd like to look at is the SP 500. So an interesting week. So this is weekly time frame, right? We are looking at 1 bar is 1 week. I'm using pro real time for my charting and to trade. Really like the tool. Right. So yeah, as you know, we've been since what I consider a bull market around early 2024, right? We had this very large consolidation here, and we had a clean break of that level. And since then, market has been really trending, steadily. We did have also a crash earlier this year. We could maybe attribute it to the Trump tariff crisis. And since then, the price really recovered and is like running quite steadily up. So we had since, before that, since like 2017, right, a long channel, right? And by channel, I mean this parallel lines that I have there. The price was basically within this long channel, right? Oscillating, playing tennis and still rising up. Channels are a great tool to get an idea of like the rate at which the price is going up or down, right? This is not an exact science. Whatever I'm about to say in the video is not like, yeah, this is going to happen for sure. I'm not trying to predict with my crystal ball what's going to happen. I am just, observing what's going on the chart and deriving a few scenarios that are likely to happen. That's all I'm doing. I'm not predicting. I'm just, reading and, applying basically statistics and patterns and common sense to read that. So we had this, steady channel, and up until, a month or two, we were still within it, but we reached the upper bound of it and we broke through, right? So that tells us we can draw another mini channel here. You see the rate at which the price is going up, it's fairly steady, right? It's fairly smooth. There's not too much consolidation, not too deep. However, we can see that last week, we had a pretty big red candle here, and it's still, maintained, price still maintained above that channel. So the question is now, because we've been going up for quite a while, quite steadily and aggressively, are we gonna see the price that's still gonna go up in this channel, or so we have a retest now and maybe going back to the upside in the next weeks or month, or are we maybe gonna see something that is gonna drop, maybe consolidate a bit more, and then keep going up to the upside, maybe, you know, throughout Q1 next year. We don't know, right? What we do know is, like, you know, the markets are still to the upside, right? We are still in the bull market. There is no sign yet that tells us, all right, you know, things are going to break down. That's it, you know. I don't know if this is overpriced or, you know, like going too high too fast, and if you should sell everything. Like, what I do know is, like, how I look at managing positions, right? There's nothing here that tells me, well, this is really overextended. We have a clear break of structure, and you know, it's time to exit or to revise the approach. No, there's nothing that tells us that, right? Yes, we did have a fairly substantial increase since you know, April this year, but you know, it's been fairly steady, right? There's nothing, like I said, that breaks really the narrative or the scenario of like a bull market at the moment. So we will see what happens, of course, in the next weeks and months. Moving on now to the Nasdaq. So, you know, it's kind of the same story. It's just a bit more volatile, but very similar to the SP 500. We also broke out of this channel. We also had a steady rise, like a steeper, basically, rise in the trend. A big candle here, a down week. So yeah, that is at a retest, and we're gonna keep going to the upside, or are we gonna get something that drops lower, consolidate back up, and then break to the upside again, right? I don't know, but you know, as I said, I'm still bullish, basically. Even in my risk management, there's nothing yet that tells me, all right, it's time to be careful or to be a bit more measured with that. All right, next up is the CAC 40, the French index. Well, the CAC 40 actually, you know, around the same time, early 2024, broke to the upside. So you can see we had this like channel there, these two lines. A very nice channel, broke to the upside, this consolidation pattern. We started the bull market, and then we had a big correction, and it's been stuck basically. So I redraw. We can remove this line. I redraw basically the channel. Now we have, you can see, a very, very long channel since even 2020. So it's going at a steady rate. We had a fairly large consolidation here. And what's really beautiful about this, so we had a, you know, it was pretty well respected resistance area there. We are, you know, working on this resistance quite a few times with really, you can see this, right? It goes deep, it recovers, and then we have really a contraction of the volatility, right? The highs and lows are basically narrower and narrower. They are closer to the resistance zone. And then we had a clean break of that level right there. So that was like really, really neat. And now we have a retest. So, you know, question, is this something we go to the upside? We have a retest and then we're gonna go back up? Or is this basically what a false breakout, and this is just going to come back under the resistance and get stuck there for some more? We don't know. We will see in the next few weeks. All right, analysis of the DAX, German index. So the German index, a bit similar to the CAC 40, except it's been in this really tight consolidation pattern there, like really beautiful. You can see how these oscillations are really, really tight, right? So it's stuck in there for some time. Yeah, what I'd love to see, you know, is for that to continue. Maybe even a reduction there. It gets tighter before we have a break to the upside. That would be really, really good. I would love to see that. We will see. Right now, we are definitely in a range period, right? And this is cooking. It is going to break to the upside, to the downside. I don't know, but there is definitely a like, you know, reduction in volatility, right? Which I really like to see. I'd like to see that before a breakout for explosive move, right? So let's find out. Moving on to cryptos now with the Bitcoin. So yeah, with the Bitcoin as well, we are in a very nice bull market. It's a bit the same story on everything, obviously, since I would say late 2023, right? We had really, that was a previous all-time high. We had really that drop. We had, extraction there of that kind of like large base. We could even actually extend it. Like this was maybe the large base, but so extraction. And then we had a beautiful there, very tight consolidation pattern. I'm going to actually change the scale type to logarithmic. It's going to be, yes, that's definitely nicer to look at. Right, so beautiful break of this base, a nice consolidation that's held above that level there. Right, I'm going to extend that. And then we've been running up ever since. Previous all-time high, price got stuck, and another very nice consolidation with a reduction of volatility, break to the upside, and then we are in uncharted waters since then. That was last November. Yeah, there are two beautiful consolidation, a bit deep, but cup, handle, small handle, we broke to the upside, and now basically we are returning to either that level or this level. I don't know which one. There's nothing that tells us that the bull market is over, right? We didn't have a clear break of structure. There is still a lot of interest in the cryptocurrencies market right now. So the rationale, is like, are we gonna see a tennis match here between these two bands and then eventually break, or maybe it's gonna revisit the previous low, and this is something that is gonna take longer. I don't know, but this is the scenario I have right now. We are definitely consolidating, going sideways on the Bitcoin, and we're gonna see in the next few weeks, right, which one plays out. Ethereum, a bit similar, but I guess it's just looking a bit less neat and trending. We got a nice push this year actually back to the all-time high. That's the blue zone there. We got a very nice push, and it just bounced back, right? And a few times, 1, 2, 3. It failed 3 times basically to get through, and now we are just heading back down. But we have also big wicks, right? These big wicks tell us that there's quite a bit of buying power as well. So, yeah, my scenario is like there's a good chance that we are going to retest this level, and then who knows how long this is gonna take, right? But I think it's gonna take quite a few months to see a turn like that, right? Even this turn, which was quite aggressive, was, as you can see, started, let's say, 21st of April, and it took August, right? So it took quite a few months, even in an aggressive move like that, to reach previous all-time high. So yeah, I don't know. We'll see what happens, but it's likely we're gonna have a bounce around this area, or maybe this one. We'll see. All right, another crypto, the XRP. Well, this is a very interesting one. I mean, we had this huge, like massive triangle pattern there since 2018. Sorry, around 1st Jan 2018. So this is the previous all-time high, around 320. And you can see since then, right, we had a massive, what I showed you before, right, but on a much larger time scale, a massive like contraction of like oscillation and volatility, right? So that's like beautiful, right? And this ended in a really tight range at the end, and a very clean break end of last year in November, and then we had this massive run right to the previous all-time high. So yeah, that's the kind of opportunity I look for, right? I really want to capitalize on asymmetric setups, right, where I'm gonna risk, let's say, 1 to make 3, 4, 5, 10, 15, right? And it's possible with crypto even more. So if you were looking for such an opportunity, maybe you drop in a smaller time frame, but you'd position yourself on the breakout, somewhere on the breakout basically of that triangle, and you'd put your stop either there below, depending how aggressive you are, right? And yeah, you target to previous all-time high. You'd be sitting at I think that's we don't see, that's that's a 1 to 10 basically, 1 to 9 risk reward ratio, right? So that's great. That's the kind of thing that absolutely I think are the most viable and the most efficient way to spend time, like looking for like trading and looking for opportunities, right? And this kind of philosophy is applicable to anything. Now it might not be something that necessarily I trade, not necessarily such a setup, because it might, right? But I usually like to look for something very specific where I'm gonna have a really, really clean contraction of volatility and a break of a key level, right, with volume. I just like to see that. I mean, they're looking at how how long this has been building on, and the massive. I mean, look, this is a weekly candle, and that's a weekly chart, right? In a week, it went from 0.58 to like 1. It just like doubled almost, right? Even more. So that's really the kind of thing that you want to look at, right? So now we got stuck on the previous all-time high. We tried to hit it 1, 2, maybe 3, maybe 4. Didn't work. But we have another like beautiful maybe cup and handle there in consolidation. So we have a big bottom like that, and then we have another one, smaller one, and maybe would love to see this, something that really shrinks, gets narrower, and then we have a breakout to the upside. And this would be something like really, really good to trade, right? If we have a really clean end of that pattern, I would love to see that. We're not there yet. Maybe early next year we'll get something. All right, move on with the gold now. So yeah, gold is also in a really, really powerful, strong uptrend, right? We have this very large consolidation there. Again, same thing. Very nice also reduction in volatility. Clean break back in March 2024. Another beautiful, that's a trade I actually took. Beautiful consolidation there and pattern. Look at this. It was really like bottom, a double bottom, and then there, a beautiful, very tight handle of the cup and a break to the upside. And then we had a nice steady trend and finishing around here with actually a climax run, right? So it's a bit similar here. That this was another beautiful opportunity that I think was around August this year. Beautiful pattern on a weekly chart for gold. Break of a very clean resistance, very, very neat. But this time, I mean, look at the rate. This went up, right? This went up, like it shot up, right? And then even more. And you can see that this was basically not sustainable, right? We had over the past like 3 weeks a huge like drop and then a bit more, still buying power, still resisting, basically going back down. But this is a logarithmic chart, right? So let me put it back on a linear scale. So are we assisting? Are we seeing here a reversal completely of gold and something deeper? I don't know, right? But what you want to have is, if you were positioned on gold and having, wanting to ride this uptrend, you do need to have a way to react, basically, to manage your position based on how fast price is rising, right? I mean, as you know, right, there are four phases, for a market. I think it's the week-off cycles. So usually you have accumulation, right, is following a downtrend. You're going to have prices that are going sideways, like nobody's looking at this, maybe people who are really expert or kind of geeking out on that and following up, like kind of like bear market. Think of the crypto Bitcoin, when everything is dead and it's winter. Then after that, you're gonna have what we called the markup, right? So that's a phase when price is steadily going into what we call a staircase, right? And each steps of the staircase is a consolidation, such as this one. We have a beautiful example here of a staircase. So you see, accumulation, beautiful staircase, one step, another step, small step here also, another beautiful step there, which was quality step for us to take position, right? So that's the accumulation phase, that's the markup phase, right? And usually, not always, but the markup phase anyways end up with distribution. That's when people take profit. But in that distribution phase, you also have climax phase, climax run, right? Buying climax, where investors are basically joining very late and price keep increasing faster and faster in an unsustainable manner, right? The price just cannot go up like that forever. So that's what's happening here with gold. Maybe we have maybe mini climax run, and it's just a massive correction as people take profit, right? So this part is called distribution. People take profit, and basically after that, phase 4, like this is the end. Actually forgot the name of it, but that's basically like what you have, right? You have these 4 phases, 1, 2, 3, 4, and gold has been going up fairly steadily. You see the rate, right? You see that even if we draw these arrows like I did before, we are literally there. We had a pause, and now look, this is literally going up faster and faster, right? So how long can this be sustained? I don't know. But as I said, what you want to have is a way to react to this kind of strong move in the market. You don't want to be, holding and giving back all your profit if this is just turning the other way. You want to have a point at which, if this happens, if you have an acceleration in price, you are going to trail or stop or take action in a way that you still leave some room to breathe to the symbol you're trading, but you're also getting ready to exit should it exceed that limit that you set for yourself, right? And that's what I use in my swing trading strategy, right? I basically there are 4 types of trade management, like scenarios, basically that I use, and to basically capitalize and make, like, squeeze the most possible out of this markup and distribution phase. Moving on with the dollar index, so I'll be quick on that. But so dollar index is basically the value of the US dollar compared to a basket of other foreign currencies. It shows its strength and weakness. Dollar has been going up for a fairly long time, right? This like channel has been basically valid since like 2008, and I think we're assisting to something interesting. For the last week, we had basically a beautiful double bottom here, right? 1, 2, and here a clean break of that level. We do have here, it's was a level here or here. That's a zone, right? There is a zone here which we may be assisting to a breakout and potentially a ride of the US dollar to the upside, right? So we'll see in the next few weeks. But if that happens, right, if the dollar rise, well, it might have an impact on the stock market, on gold, and on crypto, right? As investors are moving out of risky assets. So we will see. And in order to have kind of estimate, like, target, I'm not saying this would happen for sure, but we have that channel. So a first potential target could be the top of that channel, right? So if we look this year it could, we could have a rise of maybe, 12%, even to the previous high. So about 10%. We can also report basically, copy the amplitude of that previous move. It made a move like that previously, so the rationale is it could make another move like that. I'm not saying that it will, but I'm saying that it could, right? And so from the bottom of that, and we had, by the way, here a beautiful double bottom as well, right? 1, 2, beautiful consolidation break, and look at this. So here as well, we may see that, right? We may see a beautiful rise, so that's 25%, and from here, from the break, 20%. So who knows? We don't know, but there is definitely something going on there. So are we gonna see this breaking to the upside and heading up, or is this gonna like kind of fail or stay a bit longer under the resistance, right? This level. We will see. All right, and finally, Euro USD. So of course, this move is correlated to the dollar index move I showed you previously, where the dollar was going down, consolidation, and then maybe going up now, right? And here we have the opposite. I mean, the Euro USD basically have been going down for a long time, right? 2008 as well. So the dollar has gained strength, and the euro has lost some in comparison. So we had this channel has been in place for a long time, right? As I said. So, and we had a really long time, and we had a very clean break there. I mean, look, we had almost 8% rise in the euro value in just 6 months, right? Which is a lot. But this might not last. We don't know, right? But we had a retest there to the upside. But here, we may see a structure of reversal. So shoulder, head, and shoulder. So a head and shoulder with the neckline being here. I don't know. We'll see, right? Maybe this is consolidation also for something to then go to the upside. I don't know, but we do see, a first push try to come back down, a second push higher, and you see, look at this big week, right? A lot of sellers, and then we are heading back down again. So the next few weeks, I think, will tell us between this chart and the dollar index, or we'll find out basically maybe like where is the dollar and the euro heading. So let's see what happens next. All right, I wanted to finish also with a slide explaining why I'm using weekly charts. Weekly charts are amazing, right? They are slower, they are smoother than shorter time frames. It's not necessarily what we think of when we think about trading, but they have really, really outstanding benefits, and that's all I use, right? For analysis like this, to screen, for explosive setups for stocks and crypto, that's what I use. That's a time frame really that I use primarily. I'll go over these few points, right? But basically, the noise is going to be filtered out, right? Everything's going to be clear in structure. There are lace fake outs. You don't see, or you are not really impacted by the intraday manipulation, right? Because you are so much higher, you are zooming out so much more. Therefore, the patterns are more reliable, right? Breakouts, trends, reversal, they all have more weight, right? So whatever you see happening, there's just a better chance, there's more weight behind it, right? A weekly candle is 7, 5 if we talk about stock market, but it's 5 basically daily candle, right? So a breakout on a weekly chart is going to have weight behind it. It's going to have a lot of investors, a lot of buyers behind it. Using weekly chart also improves selectivity. You are going to have way less setups, right? But like I said, the quality and the conviction you'll have in them is just going to be that much higher. Therefore, it also helps avoiding over trading and emotional roller coasters. You make fewer decisions. You are calmer. What I love about this, I think, is, and I didn't put it there on the points, but all the decisions that I make for trading happen when markets are closed, right? And I've tried day trading for a year, didn't work out, and I'll share, my website at the end of the video for you to check, so you can read my story. But yeah, I mean, I just love that, right? I can do my routine early morning, just when I wake up, and I start the day with that. It's fun, it's relaxing, nothing's moving, everything is like, set in stone at the time, and it's just very nice. It's fun and it's relaxing. So I really love that about this time frame. So yeah, I mean, I kind of spoke about it, but it only updates once a week, right? So it really helps to have a sustainable, consistent routine. It also keeps you aligned with the big money flows. A lot of institutions, they operate on larger time frames, weekly, monthly. Less noise, you are closer to basically the true, I would say, trend of the markets. So your trades, I mean, of course, on such a large time frame are naturally going to last longer, right? But since you're going to have a much, wider stops, you're going to trade like much larger amplitudes. So you're not, as I said, going to be as impacted by manipulations and just short-term, very short-term moves or even spikes. So you just have way more room for the trend to mature, and you have much higher R potential as well, right? And I speak for myself. I've learned basically to do swing trading, became successful at it, worked out really well. And then after that, I tried out day trading on, I went as low as like tick charts, 1 minute, 5 minute, 15 minutes time frames, and I was still doing my swing trading, but now I pushed aside day trading, and wow, to focus only on weekly or daily time frame is just so much nicer, so much easier, and even the results, right? It cannot even be compared. Day trading didn't work out, wasn't able to be consistently profitable, but swing trading on weekly charts and being very, very selective, it's like, it works just really well, right? It cannot even be compared in terms of emotional peace, time spent, and performance. It just cannot be compared. And well, yeah, the last point, it's great. It's really perfect for managing passive portfolios. If you want to enter or exit certain assets at given times, using higher time frames are definitely useful. And swing trading, right? So it's aligned with holding weeks and not minutes or hours. Alright, so this is it for the video. I hope you enjoyed it. I'm gonna do that every week, and I'll try to keep sharing in a bit more details some of the things that I do and look for. I'll just take the chance to show you a little bit of what it is I'm doing. So this is a project I launched, right? Today it's like the first, like this first weekly analysis I did, and I'm also I put together a website where I intend to basically share the strategies that I use daily, right? I'll first focus on the kind of passive investment, passive portfolios pillar, which is a bit easier to put together and to explain. I've actually helped a few friends back in Singapore or Serbia to set that up for themselves, right? I've been doing that for like more than 2 years now, like specifically professional grade like portfolio and swing trading, and I helped them to set it up, and they were successful. They loved it. It worked out for them, so I figured maybe there's something I can share to a broader audience, and this is how this project started, and this is how I decided to basically do that. So you'll have the link in the description of the video. So feel free to check it out. Feel free to drop your mail as well. I'm currently building the strategy to be shared. So drop your mail. You'll get the latest weekly analysis. You'll get all the content that I release and the strategies when they're out. Feel free to also join the Telegram channel. And if you want to see in more details, basically who I am, what I've been up to, feel free to just check out the Who I Am My page. Yeah, I try to make it interesting with timeline and stuff, so you can see everything I've been up to, what I went through, mistakes I made and failures, and where I'm at today, including equity curve for my swing trading and things like that. That's about all. So I guess I'll see you next week.